Major funding for this program is provided by grants from HSH Nordbank and First American Title Insurance Company of New York, Perfect Building Maintenance, Allied Partners, Murray Hill Properties, Bank of America, SJP Properties, Greenberg Traurig. Additional funding for this program is made possible by grants from Arbor Realty Trust, BRT Realty Trust, Burden LLP, CB Richard Ellis, City Habitats, City Investment Fund, Cushman & Wakefield, Eastern Consolidated, Essex Capital Partners, James D. Kuhn Real Estate Institute at Syracuse University, Massey Knackle Realty Services, Meridian Capital Group, McSam Hotel Group, Musk Development LLC, Newmark Knight Frank, Palin Enterprises, Rosenthal & Rosenthal Inc., Signature Bank, Sidney Fettner Associates, Studley, Stonehenge Partners, Swig Equities, Extreme Contracting and Deconstruction.
Hello, my name is Michael Stoller, host of the Stoller Report, Real Estate Trends in the Tri-State Region. This summer, people said it was the summer of discontent. They said that the world was coming to an end. There's this terrible credit crisis, this turmoil in the capital markets. Office buildings can't be sold. Apartment buildings can't be sold. Everything is coming to an end. Or, as my friend Mr. Sterner says, they were really out at the Hamptons. My question is, what's happening? Is this perceived credit crisis, is this turmoil in the capital markets having an effect on the sale of property in the Tri-State region? Today I have Ofer Yardeni, Managing Partner of Stonehenge Partners, Robert Rosani, CEO of Stellar Management, and Norman Sterner, Principal of Murray Hill Properties, who will tell us what they really think is going on in this market. So what's happening? Were they on the Hamptons for 2 months? Is that really what happened with the capital markets?
They're in the Hamptons every summer.
I know
and everything slows down in the city.
You're saying everything slows down. There's no capital crisis. I mean, Rosani, who just closed the deal, had no problem financing his deal. I mean, the world is great. There's no subprime market prices, or is it just greed of those investment bankers that get higher rates?
If you're talking about Manhattan?
I'm talking Manhattan, New Jersey, Westchester, where you own property. What's happening?
The only properties that I can talk about are the ones that we own, operate in Manhattan. We bought a property 2.5 weeks ago in the midst of blood in the streets and this chaos. Properties trade. We're out getting financing. We've got at least 2 offers to finance the property.
Did a couple months ago, a year ago, would you have 40 offers?
No, we would never have 40 on a matrix. In any case, we would have 3 or 4 because that was all that's necessary. And I suspect that in another 2 weeks we will have the 3 or 4. But they won't be coming from securitized loan CBS or...
They won't come from the Wall Street firms?
No. They've either closed shop or they've closed the window or they can't sell them. But as a mortgage broker once said to me 2 weeks ago, he said, I have 50 lenders. I have no borrowers because they're asking 300 over. And that's obscene.
You know, today, I think it was in Bloomberg, they said that prices are falling. Howard Michaels said...
Where?
In New York. I mean, this was in
Show
Bloomberg.
me where.
I don't know. You know, we're all in the real estate business, but, you know, this is what I hear, Ofer. I mean, is this happening? I mean, Conan Steers said if you don't have to buy today, if you don't have to sell today, don't sell. You know, I don't know. What are people doing? You know, I just had lenders the prior week. They said that capital markets are tough. There's going to be an adjustment.
Yes. Ofer, did you lower your prices for rent?
No, in fact, I increased my rents in the last month by at least 10% on our portfolio, on the residential one. But there is no doubt in my mind that there is a certain perception in the market, and I believe that if you went to sell a property today, you would get at least 10 or 15% on what you could achieve 60 days ago.
No, you would get 10 to 15% less?
Less, absolutely. And in fact, I am negotiating several deals right now that
to buy.
To buy, so, absolutely.
So why could you get this bargain or this discount on something today?
It is very simple, because there were certain groups of buyers that were financing 90-95%. And they were going to look at deals for conversions from rental to condo. Those financing disappeared, and today you have to put 50% equity, and nobody's looking for conversion. So the banks are financing you based on the cash flow. So for a buyer like me or like Robert, that we are usually buying income-producing properties and keep them as rental, this is a garden of opportunities. This is for us our candy store. This is what we are looking for.
This is the
perfect
as opposed to
time.
the summer of discontent. This is the opportunity. Roses are there.
This is the best time, if you are a professional with equity, to go and to buy, because the perception in the market, and for people that are looking at the newspaper, is that the market is slowing. Although I believe that in the people that will buy today, in 6 months, people will say how smart they were.
I think that I remember, Michael, in the midst of the quote-unquote capital markets crash of July 2007, I spoke to a number of buyers in the market who had been relatively inactive over the last 36 months. When I say relatively, they may have bought a couple of things here or there, but didn't compete at the level they would have absent the, higher leveraged buyers. And all of them felt that it was an opportunity that they did not have within the last 36 or 48 months to buy real estate at otherwise a non-frothy price. Now, Norman is of course correct. Nothing has traded in New York City, or said differently, nothing has been put on the market after the credit crash of July and August.
So wait, you are acknowledging a credit crash.
No, hold on.
I have not heard that. Norman did not say there's a credit crash. He said they are greedy lenders who want to get higher rates.
Hold on one second.
I think I heard that.
Michael, Norman said one specific thing, but I don't think he would ever suggest that there hasn't been a change in credit.
Norman?
Credit has dramatically changed.
I don't want to answer. I don't want to.
Norman, do you think there's been a change in credit?
There absolutely has been.
Okay.
Where we used to allow people to borrow 100% of its value at interest only for 10 years, and they came in with no capital. And the first time there was a blip, or the first time somebody moved out, they then had to go give back the properties, or at least be on the edge. That wasn't a good lending process in those days. It's not a good lending process now. But some of the things that you and I talked about, Mike, the commercials that you see, $1 down, go out with a new caddy, no income verification, no employment verification. It's okay if you're a bankrupt. By the way, if you need $100,000, bring us in your house. We'll give you the money. Why do you not expect 15 or 20% of those loans to go bad?
Right.
And when they do, everybody says, oh my God, the sky is falling. Well, the question that I ask of this wonderful panel is, has anybody seen a foreclosure in a Manhattan residence? I haven't.
Personal residence?
Personal.
No.
Has anybody seen a commercial office building owner giving it back to the banks?
Norman, but I think you're a little bit confusing, because several of those properties that got the high financing were restructure and restructure. Mm-hmm. And several of the apartment buildings that have been for condo, if the lender didn't restructure the loan again, you would see that foreclosure. So it's not like everything is great and wonderful. I still believe, and I'll tell you, I came right now from a 10 days vacation overseas. And when everybody heard that I'm from New York, they all got excited. Then when they heard that I am dealing in real estate, they treated me like a celebrity. Everybody in Europe wants to be in this place. This is the safest.
There be a crisis?
There is a crisis that is if you're in denial that nothing changed in the last 30 days, I mean, you have a serious issues. Honestly, I
Let
love
me
you, but
ask
it's
you-
a serious issue.
I love you too. Let me ask you the
If you
basics.
went today to any investment banker, if it's all the big ones, today you cannot get a loan from them. They'll tell you we're not quoting. So if you tell me that there is not a little bit disconnect between
There's definitely a disconnect.
so that
But I-
affect pricing, Norman. That effect. I'm not saying that this will carry on for another year, but I'm
Ofer,
a buyer.
I think though, to be fair to Norman, what Norman's point is that show me the data points. Show me where an office building in Manhattan has sold after the quote-unquote credit crunch for substantially less. Now, to be fair, on both sides of the equation, there hasn't been anything offered. Now, there's a couple of things that were just recently offered, as we all know, and we'll see what happens there. My guess is they will not get as high prices, as you alluded to earlier, as they would have 90 days ago. I think that's fair.
Didn't you say prior to the show that you and me and he were interested in a building, and everybody wanted to pay a certain price?
Absolutely.
It was going to be 125 million, and now you wouldn't spend more than 105 million.
Well, I think,
What happened?
Absolutely. I was looking to buy this building, and I was
but he
not
was at
willing to pay the
105
price.
million all along.
And I will buy this building today. And guys, it is okay if the market goes down. It's an opportunity for us to take advantage, and regardless if it's perception or not. Today, if you will go and talk to for my kids, to my wife, to my neighbors, to everybody that lives real estate, because real estate is really the national sport in New York, everybody will say there is a crunch of real estate. So join the program, there is a crunch, but let's take advantage of it. And in 6 months, when we will buy, suddenly you'll buy another $1 billion, and hopefully I will buy another $1 billion or $1.5 billion. I'm in the middle of fundraising of $500 million, and money is flowing in because people said, Ofer, let's take advantage of the situation.
Right.
And in 6 months, people will recognize how good we did. I think New York is very, very strong.
What about New Jersey? I know you invest around the country.
I live there. Don't talk.
I know. No. Ofer once in a while is allowed to cross over the George Washington Bridge.
I honestly
Very
got
rarely.
lost. I am the
Very
only
rarely.
guy that got lost on the highway.
Don't worry.
in New
Richard
Jersey,
Lefrak, when he was on my show, when I had a New Jersey show, he said, I only know Jersey City. I really don't go any further than that. But there are deals in New Jersey that are hurting, okay? We spoke before. There is a company called Tarragon who is having difficulties in New Jersey.
Those
Not
are the
only-
condo conversion transactions, though, to be fair. To be fair. We're not.
So is the condo world having an effect?
Well,
is there,
I think,
is there a little
I think there is
adjustment in the condo
there's
world?
There's no question that in order for an individual, a person that goes out to get a mortgage today, it's much more difficult to get a mortgage today. A private homeowner, not businessmen like us to buy large buildings, we're talking about.
I want to make an
Guys,
analogy.
in June,
I
okay?
believe-
Let's get to the point. In June, Somerset Partners commits to pay $510 million, or $1,600 per square foot, the highest price ever paid for an office building. Norman,
Yes.
is that a good deal?
I don't know if it was a good deal then. That's not the question. I'm suggesting to you that...
Would that deal trade for that price today?
I can't tell you that only if the guy wants to buy it and pay the price. And it's the old question, that Golda Meir asked, are we buyers or sellers? But I want to bring back the analogy of long-term capital going bad and the bonds in Russia going bad. It had nothing to do with New York City, and there was a crisis. Everybody stopped. They said, oh my God, we all lost a fortune. Okay? It was a manufactured crisis that went away 6 months later, 9 months later. This crisis could go away within the month. Within the month, in New York City, on the commercial office building market, the vacancy is still below 5%. There's no new product coming online. Corporate profits are enormous. When I hear that the bonuses on Wall Street are going to be cut, You mean that one of the traders is not going to take home $600 million? He may only take home $400 million?
I don't know who said before the show something about the 35-year-old unemployed trader, or the somebody said that these guys won't get jobs.
No. Somebody said they may not be able to buy a $3 million condo.
The biggest issue, and I agree with Norman, I don't see it as a change. I think the question will be if there will be layoffs. If the market will stabilize in the next 90 to 120
days. Did Lehman Brothers
days,
last week decide not to take an additional 70,000 square feet? Are there law firms today saying, I don't need that extra space? Are there hedge funds saying, aren't we all geared to the financial services market? Okay, what happens if there is a slowdown? Bear Stearns has been laying off people. All these companies have been laying off people. They don't need as much office space, Norman.
Let me ask you the question, are they then giving up office space? No, they're under lease. Is Goldman Sachs stop building Site 26? No, they're building 2.4 million feet. When you look at the...
You know, when we buy
Michael,
a building, we
fair,
buy a building because we hope to get this additional rents. How many spaces are leased for over $150 a square foot?
Do you expect to get the additional rents tomorrow, or is it when everybody expires their leasing?
But Michael, I think to be fair to everyone on the panel here, we are trying to make a decision based on incident information, okay? The information in the last 6 or 8 weeks that is now really the reality, okay? Because obviously nothing changed in the economy fundamentally from July 1st to September 1st. It's just everybody figured out that, you know, some of the subprime debt and CDO debt and CLO debt and all this stuff wasn't so solvent, okay? So the perception dramatically changed, right? But as Norman says, and he's an office building landlord predominantly, that may not have any meaning in 6 months when company A, B, or C needs to go out and fill up another 100,000 feet. Or it may not have any meaning in 3 months. Does it have some psychological impact today? Of course it does. Everyone knows that. If it didn't, we wouldn't be sitting here having this show. We'd be talking about how was your summer? Yeah, it was great. How was the beach? Okay. So the question is, will that psychological impact remain, or will it ebb?
And
I'm asking the three of you. I'm just sitting here trying to...
I bought a property 3 weeks ago.
And I bought
in the midst of the chaos, in the midst of the crisis. And what I said to you is that the more I read in the newspapers about chaos and crisis, the more I know we have to be in this market.
And I bought a property also 3 weeks ago, just before I left on vacation, on 58th Street. And I believe in the fundamentals. I think they are very, very strong. Rents continue to grow. More people want to come to live in New York City. It's safe. I mean, if you look at the number of tourists that are coming and the jobs. So I'm saying it, all I'm saying is very simple, that the perception is in the market that prices are falling. And I'm taking advantage of it. But in 6 months, I believe that prices will be even higher than they are today.
I mean, Norman was saying, and he said it a number of times, the amateurs will be gone. The amateurs who were getting 100% on their financing.
But that's because the 100% financing doesn't exist. If you wanted to show up 6 months ago with your American Express card and buy a big building, you could. Today, you can't.
Did you get the points?
And the point is, you shouldn't have been able to show up 6 months ago with your
So you know what? As I've said in numerous panels, unfortunately, I called the investment bankers basically bookmakers over the years. And I said these people were bookmakers because it was when the music stopped. They'd take the loan, and then they'd sell it off. They'd dice it and slice it and all the rest. And if they can't sell it, now they're holding it. I mean, when Bill Green said 2 years ago at a seminar, and they asked him, what do you think rates are going to be in 90 days? He says, I'm sorry, I don't really look at 90 days. I look 45 days when I can sell the paper. You know, that's, you know, maybe...
The opposite of that is the real estate people should look in 2 years or 3 years when they can either increase the value or sell the property.
No, I mean,
it's not a 45-day piece of property.
I know you over 20 years. We've seen times that prices have gone down.
Of course.
Remember?
Don't sell.
If you can afford to keep it.
No, you shouldn't have bought it in the first place if you couldn't afford to keep it. Real estate is not a card game. Real estate is not buy Monday, sell Wednesday. It's a long-term asset play. if you want to buy now and sell on Friday, go to the stock market.
I think Norman brings up a very interesting point, and to a certain extent, don't lump me in with these guys, but the 30-somethings in the business now, the opportunity funds that are so hyperactive to get their money in and out, in and out. They're in for 12 months, 18 months, 24 months, and they want to be out. Real estate is more about developing something big picture and longer term. It's just in the last several years, because there's been such a wild escalation in value, people have been able to profit very quickly. Okay, so people buy companies like EOP and Car America, like Blackstone did, and made a lot of money doing that. But that's not otherwise the fundamental real estate business. The fundamental real estate business, like Norman is saying, and certainly like what Ofer owns, is more a longer-term, transactionally oriented business where you don't add value in 15 minutes. Okay, now, as Norman said when we were sitting back earlier, people got spoiled by the fact that they could buy an office building on Monday for $100 million, and on Wednesday sell it for $120 million, and that guy could then on Friday sell it for $140.
I don't want to say anything, but we do have a person like that. Norman, you bought something in October, and then you sold it in January or February for a substantial profit. Do you think that could happen today?
Absolutely. I think it can happen to the guys that are sitting here because we are professional real estate and we do it for a long period of time. And once in a while, we will find an opportunity that we can buy for 100 and sell for 150 in 30 days.
So you think
Absolutely.
So you're saying the ground, because of this perceived credit crisis, which I think is the credit turmoil, is great. It's a great fertilizer to help you increase the value of your properties.
Absolutely. I really believe
or decrease the purchase price by which you can buy them.
And what about development sites? Right now, Central Parking is selling 4 major parking lots, 6 major parking lots that they're going to try to build condos. I mean, condos are still condos.
Yeah, but you remember, Michael, you have to remember, somebody who builds a condo is going to sell them in 2 years from now. So, in my mind, if I had a development site, it's the perfect time to start one because cost of labor is a lot cheaper. You can negotiate.
You're building today. Cost of labor is cheaper
than it was yesterday, and
Absolutely.
then it will be from tomorrow.
But you have to continue your business plan just because the market is right now a little bit slow.
You know what?
I think what I would say, though, Michael, to be fair, New York City is very unique because Europeans, Asians, Middle Easterners, people from all over the world want to own a pied-à-terre in New York. We have friends that live in Greenwich, okay? Dozens of them, who are 40-something and 50-somethings that have pied-à-terres in New York City. Years ago, that didn't exist. Let's be candid, okay? Now, with the predomination of wealth, okay, I saw something on TV that 227,000 people last year became millionaires. Whether that's true or not, there are a lot more people with money
But that
today.
millionaire still can't buy an apartment. I mean,
Sure
it
he can.
depends.
Stop.
It
Of course
depends
he
on.
can.
It depends on
If
what
you are going to the market today,
If he
and
wants
you're
to buy a
opening.
$75 million home at the Pierre, he can.
No, but
Okay.
but Rob, if you are going to open today a condo today and you're starting selling today, I wouldn't like to be in that position.
Clearly.
But if you're talking 2 years from now,
And what about hotels? Let's get to the hotels. I want to bring up, somebody came to me, Ofa. There's a property next to your property on 34th Street.
I know.
Okay? He came to me
The
2
church.
months ago. The church, no, whoever bought the property, he said, I'm going to build a hotel. I want you to give me 95% of the equity. I'll put in 5%. I said, you're crazy. But there's such a need for hotels. I
Okay,
said,
but Michael, let me ask you a question.
Yes.
Let me turn it on you.
Yes.
If he came to you and said, I have 25% of the equity and I'm a
I'd still turn him down. I
great
turned him down.
developer and I've done it a bunch of times.
How many hotels are needed? The whole question is, there's
So
a
you're
market.
bare on
there.
the hotel market.
No, I like the hotel market in certain places, but I don't think you need 22 hotels in the Penn Station
by the way, I
marketplace.
think
Can you get a room tonight?
the site that you're
Anywhere?
talking about is a fabulous site because first of all, it's adjacent to my property.
No.
So
The problem-
naturally.
The problem that you have there is that he paid a lot for the site, And because I control the air and lights there, he cannot have windows on the side unless he pays me a lot of money. So he has windows only at the front and the back.
And naturally, that number just went up because we talked about it on TV.
But
So
there's
now
a crisis.
And now the fact that there is, he can't get financing.
He can't, wait a second.
So you're going to drop the price.
No, I'm going to
but
buy
he can't
him.
get financing.
He can't get financing.
He can't get financing.
So there must be a
He can't
crisis.
get equity. What?
There must be a crisis. He'll probably lower his price.
No, he has a contract right now.
I know. I'm asking you whether you're going to lower your price for
I'm
the air
not a
rights.
seller,
Of
so
course.
I'm sitting
air
and
rights.
waiting. No, because I'm going to use my
The light
rights
and air
and I'm going
easement.
to build.
Right.
Of course.
But my question is, I brought out the show. I wanted to bring it up because the week before, when I had these lenders, they say that this condition or this difficulty is going to continue for maybe a year and a half.
But to be fair to the lenders, Michael, and to be fair to us, we're on the borrowing end. Okay?
That's why I purposely brought you in.
No,
I wanted to
but
hear
hold
from
on
the
one
other
second.
side of the coin.
Hold on one
Last
second.
week I heard the grief. The world is coming to an end. You're here
We
talking.
got it. But Norman said a very smart thing in the back room. He said, okay, that 90 days ago, let's say the beginning of this year, to be fair, because there was obviously a credit crisis at the end of March, or the end of February, sorry. At the beginning of this year, lenders were more aggressive than buyers. Okay?
Absolutely.
That's exactly what he said, and he was right.
There were 10 guys
Okay.
competing for the same loan.
Now, buyers are more aggressive than lenders. Okay? Why is that? Because now we feel that there will be opportunities created as a result of the fact that we don't need to compete against people that are purely backed by lenders and are not otherwise educated enough to know that they're substantially overpaying. Okay? So to that extent, prices will ease. Okay? But it's an ebb and flow.
I mean,
98
so was the article in
2002.
Bloomberg correct when David Lichtenstein says, unless you have to sell it, you don't sell? I mean, the guy from Conan Steers said the same thing. I mean,
Look, I think David Lichtenstein is in a good position because he just bought, Extended Stay America, and he brought in that $8 billion. I think clearly if you don't have to sell today, you don't. Okay? Obviously, you want to sell when there is an abundance of capital. Okay? Not a scarcity of it.
Norman, you're a buyer and a seller all the time. You trade.
That's correct.
You're selling anything today?
We're in contract to sell 1619.
But that's sold. I'm saying, do you have anything new that you'd be putting in the market today?
We are not sellers because I don't have anything that's over a year old.
But Norman,
but
ask
Norman
it
has a
differently.
different
If you had
program.
something to sell that was ready
That's
to sell
what I'm
now,
saying.
Be out on the market right now,
Okay,
and I'm
so-
telling you
so-
what
Hold
you're
on.
forgetting. What you're forgetting is the overseas money that is coming in to the most democratic, most transparent, best capital markets in the world is Manhattan. And when you look at all of the countries that Ireland, Israel, India, China, 10 years ago, if I had said that Dubai is buying, everybody would have said,
Laughed at you.
where's Dubai? Okay?
Right.
We have property that when we are offered for them to buy our properties, I'm a seller.
Okay.
I'm happy to do it.
So I have to say, that's why you have different, it's like ball games. Last week I had the guys saying, we're in the bottom of the ninth and it's really going to be difficult. I got to bring in a reliever. Here I'm on the top of the first, and you guys are saying, hey, the lenders were a little more cautious.
But
I
Michael, at
also-
the end of every
Mike-
game,
because I'm
there's a
finished.
beginning of a next game.
Okay.
Michael, you also understand who was your lender. If
Okay.
your lender from
Ofer-
last week, they were from Wall Street, this is a different game.
That's
Like
why
I bought
Ofer, we have, I thank you, but time is up. I'd like to thank Ofer Yordeni, Rob Rosani, and Norman Sterner. Next week, we're going to talk about what's happening in Lower Manhattan, and I'm happy to say that all three of you will be back later on in the season when we'll be talking
But
about...
not next week.
Not next week!
Because Oprah hates
Oh,
Lower Manhattan.
Okay, Ofer doesn't like Lower Manhattan. Thank you. See you next week.
Major funding for this program is provided by grants from HSH Nordbank and First American Title Insurance Company of New York, Perfect Building Maintenance, Allied Partners, Murray Hill Properties, Bank of America, SJP Properties, Greenberg Traurig. Additional funding for this program is made possible by grants from Arbor Realty Trust, BRT Realty Trust, Burden LLP, CB Richard Ellis, City Habitats, City Investment Fund, Cushman & Wakefield, Eastern Consolidated, Essex Capital Partners, James D. Kuhn Real Estate Institute at Syracuse University, Massey Knackle Realty Services, Meridian Capital Group, McSam Hotel Group, Musk Development LLC, Newmark Knight Frank, Palin Enterprises, Rosenthal & Rosenthal Inc., Signature Bank, Sidney Fettner Associates, Studley, Stonehenge Partners, Swig Equities, Extreme Contracting and Deconstruction.